For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
The S&P 500 just went on a 9-day winning streak, which is the longest in the past 20 years. And this past week, our weekly picks returned 4.32%, while the market only went up 2.79%. Let's talk about it all in today's newsletter.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side.
All right, everybody, welcome back to another episode of the Saturday Sendout from the Simple Side. I'm super excited to have all 300,000 returning subscribers back. And if you are new, welcome to your first podcast. We're glad to have you here. If you don't know, I have a survey that gets sent out every single week to subscribers. You can go and click on the link in the newsletter at thesimpleside.substack.com. That'll say start survey on it. And you can go and tell me what kind of things you want to see talked about, reported on, discussed, mulled over in this weekly newsletter. So far, we've made over 30 updates, and everybody's most requested and favorite has been our daily stock newsletter, which again, there's another link in our newsletter if you're not reading it that you can go click on and go subscribe there. That is also thesimplesidedaily.substack.com to find that. All right, let's talk about what we've got going on today. For our updates and developments, our website is currently in pre-release. That's right, we're building an entirely custom website for any and all subscribers to use. There will be paid features on it for paying subscribers, but you can go ahead and sign up for the pre-release by going to thesimpleside.news. That's it. Just put that in your browser, thesimpleside.news, and you'll get taken to our pre-release page and you can sign up there. There's also links in today's newsletter that you can go click on and they'll take you there as well. Paying subscribers, be on the lookout for more copy trading emails. All you have to do in those is go and click on the portfolio, and then you can copy trade one for one all of the trades that I am making. As another reminder, you're going to have access, if you subscribe, to giveaways that I do every single year, usually every couple of months on the newsletter. Last year, we gave away over $4,000 to subscribers, and we plan on doing even more giveaways this year. So be on the lookout for that as well. All right, let's talk about our portfolio returns. If you're reading along with the newsletter, just scroll down to the header section that says portfolio returns, and we'll run through all of this real quick. Our flagship fund is currently down 5.22% year to date. Our contrarian trades portfolio is up 46.26% year to date. And our weekly stock picks are up 28.6% year to date. That means our overall returns between all the portfolios is 21.91% for the year. Now, if you follow along the newsletter, you likely noticed that I did not post as much this week as usual. And typically as a subscriber, you're going to receive a weekly free stock analysis called a Berkshire Buy and a free educational article. But I have been extremely busy doing work on behind the scenes things like the website, like some upcoming contrarian trades that I have. And I hope to pre-release everything to you guys very soon for the website. And these new contrarian trades will be coming out next week. And I'm super excited to be sending those out to everybody. For those of you that don't know, the main point of this podcast and newsletter every week is to send out our weekly picks. And those weekly picks, we have been tracking for over 41 weeks. And over those past 41 weeks, we've returned 48.96%, while the SPY has returned 6.73% over the same period of time. We're hoping that these returns continue for the next 11 weeks, and that will make a year of making weekly picks and outperforming the SPY with everything tracked individually. All right, let's talk about some quick market commentary. As you can see, if you're reading through the newsletter, you should go check this out. If you're not, thesimpleside.substack.com. We cover sector weightings, performance comparisons, and market cap performance for everything this past week. But I also tell you a little bit about what's happening in the markets. Currently, the projected one-year market returns are 1%, which is lower than last week's 1.4% expected returns. And this week, we saw 6,197 stocks with gains, 3,170 stocks with losses, and the median return this past week was plus 1.93%. You can see the distribution of returns in the newsletter. Now, last week I gave some commentary into the wild ride known as the US stock market. We have all been on a roller coaster, hitting some of the highest highs and the lowest lows, making some of the most interesting history happen in the markets. Most recently, we saw the longest S&P 500 winning streak in 20 years, which is 9 straight days of gains. Now, through all the mess and the noise, I mentioned that I have been seeing some interesting action in the energy sector. I mentioned Berkshire's purchase of Oxy and Dalio's purchase of VST. Both stocks had respectable weeks, up 1.21% for Oxy and up 7.99% for VST. Now, as I mentioned before, I have been holding all of my personal holdings, which paying subscribers have access to, and I added PM and WN as volatility hedges. And every time I see the market dip, I have been buying that retracement. I think all of those are great opportunities to get into the market at reasonable prices on a lot of really good stocks. Now, it seems like a lot of the investors and the market makers are sitting on the edges of their seats at the moment, looking for nearly any reason to go all in or cash out their holdings. And this has led to some of the most ridiculous fabricated news stories breaking and being traded over the past couple of days. I'm sure you've seen multiple headlines that have come out that have affected the markets tremendously and then have come out to be proved as fake. Things like the 90-day tariff pause and other news stories that have come out that have not exactly been true. We're seeing the effects of dumb money in the markets in real time right now, and we want to make sure that we're focused on holding and buying good companies at fair valuations instead of finding companies that are speculative in this market. All right, let's talk about what we've got going on sector by sector. This is a request by one of our subscribers that we added to this weekly report. We have 3 top performing sectors: industrials, real estate, and technology, up 3.34%, 2.81%, and 2.47%. And our 3 bottom performers for this week were utilities, up 1.16%, energy, up 0.90%, and basic materials, up 0.41%. Now, I also love this quote by Mohnish Pabrai, and I talk about it every single week, where I say he believes that investing in the most hated and unloved items is the best road to success. So I take sectors that have underperformed the market year to date and have underperformed the market over the past month, and I always send these to you guys as possible options to look for value plays over the next weeks, months, or years to come. The current 3 sectors that have underperformed are consumer cyclical, down 16.24% year to date, industrials down 11.68% year to date, and energy down 11.74% year to date. Now let's talk politician trading. I track 2 ETFs, NANC, which tracks Democrat trading, and GOP, which tracks Republican stock trading, and I report on their performance every single week. NANCE was up 3.69% over the past week, up 6.67% over the past month, and down 2.81% year to date. GOP was up 3.36% over the past week, plus 6% on the month, and down 1.9% year to date. For comparison, the SPY year to date is down 3.83%. Now, over the past 30 days, 10 politicians have made 125 trades with a total trade volume of 1.96 million, and the buy to sell ratio is down drastically to 0.77, which is much lower than last week's value of 2.57 and even lower than the week before that's value of 10. This shows a massive slowdown in the politician bullish sentiment. However, I would also like to call out the fact that we watch politicians trade massively, be very bullish, and then all of a sudden we watch the S&P 500 have a historic 9-week run. This is why paying attention to politician trading can be extremely important for your trading strategies. Now, if you want to see the 5 most recent politician trades, you can go and look at those in the newsletter. Again, thesimpleside.substack.com. Now, for insiders, we saw an ETF that we track, SURE, or SURE as I refer to it as, up 3.56% over the past week, down 0.37% over the past month and down almost 5% year to date. The monthly buy-sell ratio for insiders is up to 0.6, higher than last week's 0.49 and above the 5-year average of 0.36. This indicates a slightly bullish sentiment from insiders. Again, you can see the 5 most recent trades if you go and check out the newsletter, and I'll report on just one of these for you in today's podcast. I want to talk about Stefano Pessina. His average 1-month returns are 1.59%, average 3-month 3.69%, and average 1-year returns are 9.1%. Now, the stock that he bought this past week was Walgreens, ticker WBA. It's 100% of his portfolio, and he is the executive chairman of the board, which is probably why it's 100% of his portfolio. It's the only stock that he really cares about. Now, interestingly, if you were looking at insider trades and you saw this, you'd think it's a great time to buy in. The CEO's buying. What a wonderful time. Well, you would be wrong. He bought over $9 million worth of stock, but guess what else he did? He sold it. He sold it immediately. I would recommend staying far away from WBA. The CEO doesn't even seem to believe in the company's ability to create capital and outperform. Of course, I talk about CBRL, which is Cracker Barrel, which GMT Capital Corp bought in the newsletter. So go and check that out as well. Now, for those of you who have been paying attention to gold, have been buying gold, have been using it as a hedge, I've got a gold tracker that goes out every single week in this newsletter. So go and check that out, read that there. It is free for everybody to go and look at. We give a technical indicator summary, a moving average summary, a fundamental summary, and then give you some strategies and scenarios that might play out over the next week. Now, if you're a paying subscriber, you know that you have a bunch of trades that you get to go look at every single week. And those are the trades that we have tracked that have returned almost 60% annualized returns from the past 41 weeks, I guess, of us tracking. So paying subscribers, go and check out all of those buys for this week. We're extremely excited to see what happens over this next week. We're extremely excited to be releasing the website, the new Contrarian Trades, and a bunch more to you over this next week. I cannot wait to see where everything ends up over the next coming weeks, and I will see you next week with more stocks. Have a great one.